Welcome everyone to another Maine SBCD, ABCD, Maine SBDC webinar. There's so many acronyms. It's like one of the jokes of the advisors, like it's hard for us to keep them straight, let alone all of you. So we are the Small Business Development Centers of Maine, and we are here to help with just about any of your small business needs. My name is Kelsey Reardon, and I am with the Maine State Office, right in Portland. So we're hosted by USM. And today we are joined by our accounting specialist, Barbee, and we are going to be going over rounding a third and heading home. So that fourth tax quarter. Kitty and I were just talking about how cyclical the tax seasons can be throughout the year, different problems that she faces at different points in the year. So today we're hoping to set you up for success so that there are less problems when you go to slide into home. If you have any questions along the way, feel free to stick those in the chat below. You can also respond to any email that you've ever gotten from me, and it'll end up in the same place. So if a question pops up later, feel free to reach out. I'll be sending out a follow-up email that will include the slides as well as a link to the recording. So if you want to rewind or there's something that you miss, or you have to jump off early, feel free to watch that recording later on. We do our best to record these sessions. Technology doesn't always allow us to do that to the greatest of our ability, but we try. And so we publish those on our YouTube channel. And there are a few other sessions that Kitty did over the last 2 years, last year. And those are in there. So while they might not be exactly the same with different years, most of the information is pretty relevant, and all of our YouTube channels in the description have it says like recorded live and the date, so you'll know how accurate like the fees or whatever information we may have mentioned might have changed in the different tax years, but you'll be able to find that information there. I believe we're going to be using the chat to learn a little bit about you as well today. So go ahead and introduce yourself. Let us know maybe where in the state you are or what industry you're in, and be ready to stick your answers in there later when we come back to it. I believe that's all I had to cover to get us started today. So I will pass it over to Kitty to get started.
All right. Thank you, Kelsey. As always, you do a great intro here. Welcome, everybody. As Kelsey said, we have called this webinar Rounding Third and Heading Home for a couple of reasons, right? It is baseball season. I'm sure there's a lot of big baseball fans out there, but also just because of the relevancy. Third quarter ends in just a couple of days, and then the end is in sight, right? 2022 is almost over. So this is a good chance for us to stop, regroup, and kind of figure out what do we need to pay attention to so that we are ready for the year end. And can everybody see those slides okay? Awesome. Good. All right. I want anybody to unmute and just tell me right now before we get into this, what is your frustration with bookkeeping? Anybody jump in? Is it staying caught up? Is it understanding it? Is it tying it back to your taxes? Where does your frustration come from? Throw it in the chat, speak out, whatever works.
I think for me, it's definitely keeping track of it, and it's just not an intuitive thing for me because this is I was in a much different career field for the last like 20 years, so it just it's not something that's coming naturally to me at all.
I think that's such a valid point. You didn't get into business to be a bookkeeper, I'm assuming, like I did. Right? That's not your forte. It's not your experience. It's not your education. So, but you do have to learn and be good at a certain portion of it. Anybody else? All right. Well, with that, my name is Kitty Barbee. I am the owner of Barbee Business Services. And as you can see from this slide, I've got a few credentials on the left, but more importantly, in front of you are all the things that I love to do when I'm not busy at my desk or giving webinars or working with clients. I say that's a huge part of the work-life balance. especially that little guy on the right. He's crazy. His name is Chewbacca, and he's not that little anymore, but he keeps me busy. All right. Oh, my slides don't want to advance. Hold on.
As we say, technology is great when it works. In the meantime, we did get a couple other frustrations in the chat. So Bronson said lack of time while running the other aspects of the business. Kristen said fourth quarter for us is so busy, so keeping things polished is tough. Diane said just getting back into small business, so lots of new options now. So maybe it's just keeping up in general with the new things. And then so far, Chewbacca is everyone's favorite part of the presentation. So we've got time.
He is cute. So really our goal today is to take a review of the year, right? Where are you? Where are you? Are you caught up? Aren't you caught up? What are some of the things you should be reviewing now? What are some of the things you need to be gathering? What are some of the things you should be fixing? And then we're going to take a look at some of the common issues you might be having in your bookkeeping. I apologize. It seems to be really delaying the changeover between the slides.
That's all right. I was so taken with your falling curtain earlier. It's just, there we go.
Oh, yeah, I think the delay just increased for some reason. All right, so here we are. It is September 27th. Third quarter is almost over. We have one quarter left in this year. So this is a good time to take a real quick status check. Which one of these are you? Are you on the left? You know, sort of buried in the paper. I got to dig my way out of here. I've got a lot to do to get this cleaned up. Or are you on the right? Just getting ready to sail into home and enjoy that sunset. Neither is wrong, right? It is what it is, but now is the time. So the first thing I want to just talk about is really paying attention to the clock, right? I hope that all of you have somewhere in your office, on your phone, somewhere, a calendar with all of your deadlines, and that you're making those deadlines because they're so crucial. And those deadlines really do get a lot closer than you think. September 15th was our third quarter estimated tax payment. Hopefully those of you who needed to do that got that in on time. It was also the deadline for the filing extension for 1120, 1120S's and 1065s. And in just less than 2 weeks, we have our deadline for our personal extension. So I hope that somewhere as you prepare for next year, make that calendar, have those deadlines in front of you, know what you've got to have done and when, and don't miss those deadlines. Here's a good example. If you have to pay quarterly estimated tax payments, and if you do the first 2 quarters absolutely fine, and in the third quarter, if you miss that payment and you say, okay, I'll make it up in January, you will get penalized, okay? Because they base it upon what you owe per quarter, not necessarily what the sum total is that you owe for the year. Is it fair? No, not necessarily, but it is what it is. So those deadlines are very, very important. So let's pay attention to those. Invoicing. Now is the time, right? Catch up on all that invoicing. That is cash that ought to be in your bank account and not in your client's account. So if you're behind, it's probably the #1 thing you can do to make sure that you've got an even cash flow. Get those invoices out. Follow up on unpaid invoices. I have been working with one client who, through a bunch of various reasons, lost their in-office person and has been using me to follow up on about $50,000 worth of unpaid invoices. But you know what? A few phone calls every week and that money's rolling in. It's not necessarily that people don't want to pay, but they get busy, they forget, and sometimes that gentle nudge is enough to help. All right. If you have software, send out statements, send out invoice reminders, and then make sure that you're capturing any and all bad debts so that you can write them off for those clients who can't or won't pay you. Same for your expenses. It's time to dig out that giant box of receipts, right? To start to organize it by month, and then start to maybe jot some notes on it and then get it entered, whether it's an Excel spreadsheet or it's a software program. You need to get these expenses entered in so that they can be accounted for and categorized into the right category for your tax return. All right. And then finally, be sure that you are separating both your personal and your business expenses. You don't want to be doing that in January and February and trying to figure that out. Make sure that the personal stuff is taken out of the business items, or noted that you may have paid for it with a business account, but it is in fact a personal item. Mileage deduction. So as I'm sure most of you know, you really have two options when it comes to the mileage deduction. You can either claim mileage, or you can claim actual expenses such as fuel, repairs, maintenance, etc. You can't do both. Okay. I have a lot of clients who track both because they want to make sure they are optimizing which is the better expense. All right. But if you're going to do the mileage deduction, you do need to have some sort of a mileage log. It can be on a piece of paper, it can be a notebook in your car, but it's also can be an app, which makes it much, much easier. I actually use an app called Mile IQ, and it's so simple. As long as it's in my car, it tracks where I go, and it says, okay, you just traveled from point A to point B. Was that business or was it personal? If it's business, I swipe right. If it's personal, I swipe left. At the end of the month, I actually get a report, and it says, here is your total mileage. Here's your total business mileage. I then take that report, I jot some notes on it. Who did I visit? What was the purpose of the meeting? Okay. The IRS does require that you have a good written record of these trips, the who and the why. Okay. The IRS also expects the mileage log to be contemporaneous, meaning done as it happens. There have been court cases where they have thrown out somebody who made up or went backwards in time and redid a mileage log. The IRS said, no, it needs to be done as it happens. And they threw out that deduction. So you want to keep up on your mileage log. Also, something to note, in 2022, mileage went up. For the first half of the year, it was 58.5 cents. And for the second half of the year, it's gone up for 62.5 cents. So that is going to be a good advantage for those of you who are tracking your mileage. Independent contractors. So those are those people that you hire, not as an employee, but as an independent contractor to provide some sort of work or service for you. If you pay them more than $600 in 2022, you must provide them with a 1099 no later than January 31st. This 1099 is basically a record of what you paid them. They get a copy, the IRS gets a copy, and you keep a copy. So what can you do now? Now is the time to make sure that you have current W-9s from all of your independent contractors you have paid. That will save you the scrambling that often happens in January, where you figure out who they are, but you don't know where they are, you don't have an address, you don't have an email. So do that work ahead of time so you're lined up for year end. Now, they can be done by hand, or you can use software to create them. And I've listed some of the software that's out there and available to do online. I use that Track 1099. It's cheap. I think I pay maybe $2 for every 1099 I do. And they will electronically send it to the IRS. They will electronically send it to the client, and they'll get you a copy. So it's very quick and efficient. No more of this handwriting. Reconciling your bank accounts. This is one of those things that, although I take a lot of pleasure in it, I know not everybody does, but it's really important that now is the time to get caught up with your reconciliations on your bank statements. All right. Just to review your whole process, whether you're using software such as QuickBooks or you're using an Excel spreadsheet, you still want to reconcile against your bank statement. It ensures that you've captured everything that is run through that bank, whether it's a deposit or an expense you paid for. It will show you those foul balls that are problems, things that never get reconciled are those things that you need to report. For example, in QuickBooks, if you have an item that never reconciles when you're doing reconciliation, that item still goes on to your profit and loss or your balance sheet. So it still flows to those reports. So it's really important that you're taking care of them and figuring out what you need to do to correct them. So it's a validation of the work that you do. And you should be doing these month by month. Trying to do a whole year of reconciliations is really pretty daunting. Your profit and loss. So now's the time, again, to really dig into this profit and loss. What is it telling you? What are the outliers? What am I seeing for patterns here? Okay. Here are a few things to look out for. Make sure you have distinguished between interest expense and interest income. As small as that seems, I see it again and again and again and again. Interest expense is what you pay, for example, on a mortgage. You pay the principal and you pay your interest expense. Interest income is what you earn on your bank account, those few cents that you see every month, 1 penny, 2 penny, 3 penny. And make sure that you have categories for both of those. They don't all get lumped together. As you review the profit and loss, do you see any negative balances on there? That can mean a lot of different things, but it's usually an indicator that you have classified something incorrectly. So watch for those. Review your revenue accounts related to COVID or PPP loans. We want to make sure that you're breaking those out from your operating income because they might be non-taxable items. Okay, so you don't want to lump them into all of your income because that's going to inflate your income and inflate your tax liability. Compare your profit and loss to previous months, compare it to previous years. Do you see any huge changes? And when you look at those changes, are they normal, right? We had a huge spike in income, or did something happen and I've got an error there? And just doing those comparisons on a monthly basis can help you really pick those out. In the same way, you want to compare your cost of goods sold. Does that seem in line with your income, right? If your cost of goods sold is far larger than your income, what does that really mean? Why, right? This is your chance now to kind of dig in and dig down into these details and figure these things out. It's going to give you really good information. And now's the time for you to look at those and say, oh, I've got a problem. I need to correct it. Look for any uncategorized expenses and revenue. Okay. In software, there's typically an account called Ask My Accountant. And that's the time. Now's the time. Dig into those. What are those? Ask a tax preparer, ask somebody, how should I be categorizing these? I don't know what to do with them. I would never suggest that you just leave them off of any report or any spreadsheet or into any software. Put them on there with detail. And in the end, let your tax professional decide that that's a deductible expense, or we need to count this revenue, or we don't just leave them off. Meals and travel expenses. You have the appropriate backup information. We already talked about travel and the mileage log. Let's talk about meals. Can anybody tell me when you can deduct 100% of meals for a business and when you can only deduct 50%? Anyone? Okay, so here's the rule. If you take a client out for a meal to a restaurant, you can deduct that 100% in 21 and 22. If you bring your client to your office and you run out to the local Freshies and bring back sandwiches and sodas, you can only deduct that 50%. Isn't that bizarre? But that is the IRS standard for 2021 and 2022. Same thing. If you took your staff out for a meal in a restaurant, that's 100% deductible. But if you brought back or had something catered and brought into the office, that's only 50% deductible. That's a really good tip to keep in mind so that at year end, your tax preparer is not trying to sort through what was in-house, what was out at a restaurant, etc. Budgets and budget work. So third quarter ending, this is really the time, if you have a budget and if your business works with a budget, to really start to look at it. All right, analyze where you are year to date. Where are we landing? Are we going to hit our budget? Or is our income going to hit it? Our income going to be under budget? Is our expenses going to be under? Expenses going to be over? This is a really important planning tool for a small business, because if you sort of set everything against this budget, all right, you need to know and you need to adjust, right? If your income is way under, all right, what are your choices? Figure out more income or you cut expenses. So this is the time to really start to dig into that, look at it and say, what are we going to do next year? All right, are we going to create new income streams? We're going to have less expenses. What is the plan? Typically what happens is we go through a holiday season, really from late November through January, then we're working on taxes and we lose this time. So now's really the time to look at this and say, where do we stand and what do we do about it? File organization. I think this is a topic nobody likes to talk about. But make sure that at the end of this, that all of your files are in good order and that they support the tax return that you are going to file at year end. Okay. You could print out a profit and loss for a year from QuickBooks, give it to your tax preparer, and they can do your return. If by chance you were questioned or audited by the IRS, that profit and loss means nothing to them. They're going to say, I want to go back to your source documents. That is your invoices, that's your receipts, that's bank statements, it's all of those items. So how are you organizing those? How are you keeping those? All right. In general, I like a system that's pretty simple. Okay. And so I say organize everything by the month. So all of January goes together with the bank statement. All of February goes together with the bank statement. And then organize by income versus expenses versus other things like loan statements or payroll records. Just keep an organized file. And how long do we keep them? Right? I think the general answer all here is 7 years. But the reality is, for the IRS, you only have to keep your records for 3 years from the time you filed your return. Okay. 7 years if you have employee records. They're required to be kept for 7 years. But in general, it's 3 years. The other thing that I'd like for you to think about is saving your files electronically for future reference. I don't know many people who do this. I do it because it's sort of the nature of what my business is, but I scan everything and save it in a cloud file. You know, a receipt will fade after what, 6 months, and then it really doesn't do you much good when you can't read the receipt. So I do save all of my files electronically. Something to think about. It's another additional step, but it could save you a lot of headaches in the future. Okay, here are some of the common bookkeeping issues that I see as I work with clients and work with their books. The first one is probably a foundational element here, and it's really important that you understand the difference between profit and loss accounts and balance sheet accounts. All right. For a quick review, there are 5 types of accounts. Every financial transaction has to fall in one of these accounts. Okay. The first 3 are assets, liabilities, and equity. An asset is something you own, such as the money in a bank account or equipment, okay, or a building. A liability is something you owe, could be a credit card, could be a mortgage, all right. And equity is basically if you took your assets, paid off your liabilities, what remains? You might have negative equity or positive equity. Those 3 accounts, assets, liabilities, and equities, anything in those accounts go onto your balance sheet. They do not go onto your profit and loss. All right. The other 2 accounts are income and expenses. Those are the ones we're most familiar with, right? Money that comes in and then what it costs to make that money. And those are the expenses. Those go onto your profit and loss. So if you understand that, it's going to make some of this make more sense. Some of the other areas that we're going to talk about in a minute. All right, another error that I've seen a lot this year is recording net deposits as sales income. If you use a third-party vendor to get payments, maybe you use Stripe or PayPal or Square, when they deposit into your account, they've already taken out your fees, their fees, okay? So if you just take that net deposit and call it income, you've lost the opportunity to capture their fees as a deductible expense for your tax return. Does that make sense? So you want to make sure that you're capturing that full picture of what's happening, which is my sales was $100, but I have $5 in merchant expenses. And so my deposit shows $95. That's the accurate way of capturing them. The next item, treating sales tax as an income item rather than a liability account. Sales tax, if we take sales tax, we hold it for the state and then we pay it to the state. All right, it's a liability account. It's not an expense and it's not income. Okay, you should have an item set up that is called sales tax payable to the state of Maine. When you collect it, that number goes up, and then when you write a check to the state of Maine, that number goes back down. All right, I've seen it called sales tax expense. Okay, I've seen it just called income. All right, it's not an income item, it's not an expense item, it's a liability account. In the same way, I've seen many people treat credit card payments as a credit card expense. All right, again, credit card is a liability account. And then as you purchase things with this credit card, those items are categorized to the correct accounts and that balance goes up. When you pay your monthly payment, the balance then goes down. Okay, so it's a liability account. You can't deduct that monthly payment on your credit card expense. So I see a lot of people who will say, okay, I'm paying $200 and here's what I bought for the $200. That is not the accurate way to treat your credit card payments. In the same way, I see people classifying the monthly loan payment as an expense rather than a liability account. All right, if you have a loan payment, you pay so much in interest and you pay so much in principal. So you have a liability account, okay, and when you make a payment, you're paying principal $900, all right, and that goes against the liability account, lowering the principal, and then you have $100 in interest expense. The interest expense is the deductible part of that transaction, not the whole payment. Owner's draws, taking money from the account to pay yourself and classifying it as wages expense. If you are a single member LLC, you get paid by what is called an owner's draw, and that is an equity account. It's not an expense account. Okay, it is not something you get to deduct on your tax return. All right, so when you take $200 out, the category should be owner's draw. It's an equity account. It doesn't show up on the P&L. If you are an S Corp, then you actually are required to take a salary with withholdings. In that case, it is then a wage expense because all wages are an expense item on your P&L and can be deducted on your taxes. And then finally, another common issue that I see is failing to record and depreciate assets. If you purchase an item, a large piece of equipment, let's say, you don't want to just record that as equipment expense. And there's some general guidelines. If it is an asset, it has generally a life that is longer than 1 year. And generally people say it costs $2,500 or more. You want to record each of those as separate assets in your software. And I generally say, tractor purchase, I call it tractor 0522 to show when it was purchased, and you put the cost of it in there. Your tax preparer then takes that information and depreciates it, creating a depreciation schedule, which you then get to deduct over the life of that asset. All right, so it's really important that you're separating out the assets from the expenses. All right, Kelsey, I see a whole bunch of chat. Do you want to stop and kind of address some of those?
Sure. Earlier they were wanted to excuse me. They wanted you to clarify which mileage app you were using, and then Kristen supplied a couple of options. But what was the one you used?
Okay, I use Mile IQ. It looks
Mile
like a yellow M, very simple to use. It's free up to 40, I think 40 trips a month, and then you have to pay something. But it's so simple, right? I just have to have it on me, and then it's swipe right, swipe left. You get this pretty report. You make some notes, and it goes into the file for that month.
And then based on that same conversation of whether you can deduct 100% versus 50% for a lunch out, Kristen guessed right when you gave the answer, so points there. And then Andy asked, how do you recommend keeping track of ordering in versus going out? Do you make a mark on the receipt or make a note in QuickBooks?
Yeah, I think both of those are great. I would always go back to the source document, but then I would make a memo in QuickBooks. So if you were in QuickBooks, I would actually have I would have a category called 50% meals expense, and then a category called 100% meals expense. So when that expense came up, I would just categorize it into the correct category. But your receipt is really going to be the source document that says, oh yeah, we ordered from Freshies versus we went to Texas Roadhouse. That's really going to be the validation that it was 100% versus a 50%. And that whole thing came up because they were really trying to support restaurants that were struggling so much through COVID.
Okay. Is providing a meal at a staff meeting a meals expense? How does that work?
50%, because you didn't go to a restaurant. If you ordered subs in, if you brought in pizza, it's 50%.
All right. And they said, thank you for clarifying. Two other things. One seems to be like a comment. Kim says, I know an accountant who advocates saving IRS returns forever. I don't think that meant supporting info, but they weren't sure. Do you have a feeling about that?
The only thing that you're required for 7 years is your payroll records, employee records. The IRS has 3 years to audit you from the time of your return. So that's where that number comes from. Okay. I think people who like us, accountants, bookkeepers, tax preparers, we're probably a little more paranoid than the normal person. So maybe that was his general, thought. I'm going to keep it forever, but really you only have to keep it for 3 years from the time that you filed the return.
Better safe than sorry, maybe. And then one other question, which I think would be a whole nother discussion, but Diane is asking about QuickBooks and the cloud version versus the desktop, and which is a better choice. And my understanding is that it's a personal choice, and there are a lot of information available.
Right.
I think we have a webinar. Were you a part of Tina's QuickBooks webinar? I can't remember. We do have a webinar recorded that kind of goes into the differences, and I can find that link and make sure that's included.
Yeah, because there's an awful lot of things you want to think about before you make that decision.
But that's all the questions that came in so far.
Awesome. Okay. This next slide is something new for 2022. And Kelsey and I were talking about it before we started here today. It is going to be a little bit chaotic and very confusing for a while. Okay, starting in 2022, if you use a third-party vendor to accept payments, Square, Stripe, etc., and if they paid you $600 or more, they now have to send you a 1099-K. Okay, so I want you to think about this. You have 2 clients. One of them paid you $60,000, the other paid you $40,000. They both use Square. You're going to get one 1099-K for $100,000, okay, broken out by month. So number one, you need to make sure that your customers know, do not send me a 1099 NEC because you used a third-party vendor and I'm going to get a 1099-K. All right, they should not be sending you a 1099 NEC. All right, it's gonna be confusing. All right, and the 1099-K does not include credits and charges and fees that they charge. So you need to have really good records to show, okay, even though I got $600 here, I only received, there was $100 in fees from them. So my net income was, $500. So again, it just requires a level of bookkeeping that is more detailed maybe than a lot of people have been accustomed to. So that's new. I can see a lot of bumps in this. I think it's going to be really hard, and I think we really need to get the word out, because I get a lot of 1099 NECs on a yearly basis. So making sure that all of those people who send those to me know that if you used a third party vendor, do not send me a 1099 NEC like you typically do. All right. And of course that goes to the IRS, and they're going to compare it to your total income, and the return may say, what income did you receive on a 1099K? What did you receive on a 1099 NEC that was not on a 1099K? And then what did you receive that was on neither? So you've really got to have some good records for that. It's September. They're really just now starting to really talk about this a lot. And I think it's going to cause a lot of chaos come January. But my real message here is there is still time. This is the time, right? Let's make the most of it. Let's dig into all of these things and really start to say, here's what I need to work on. Here's what I need to dig into. So I'm not feeling that pressure over the holidays or at the first of the year. I think it's really tough when January, we've got to pull all of this together and finalize it. So, but we want to be focused on 2023. We don't want to be focused on 2022 all the way for 6 or 7 months in 2023. So getting that stuff together now, organizing it, preparing it is going to save you all of that time on the front end. And then finally, these are just 5 thoughts about how business and baseball can they are similar, right? Making sure you have the right team, where to put your people, right? Where they need to be. If you're horrible at accounting, get the right person who is good at that or can be trained on that aspect. All right, getting in shape, making sure everybody has the tools they need. It could be training, it could be software, and making sure that you're keeping a good, healthy workplace with the right benefits, right? Keeping all of those players happy to help you in your business. Changing the plan. If the current plan is not working, if things are not happening the way they should be, if your income is out of whack or your expenses are flying high, it's time to adjust. So having enough information to be able to say, here's where we're at, we need to change the plan. Remember, and I'm sure if you're a business owner, you already got this, it's not always glamorous, right? It's not about 3-hour lunches and 4-day work weeks. It's typically, for most of us, it's about working really, really hard, really digging down to say, what do I need to pay attention to? Where do I need to improve? But that's also really exciting. As you become better at that, you're going to find that strategy part of this becomes a lot more rewarding for you. And finally, it's a new game every day, right? A new chance to say, okay, here's what we're going to do differently. Here's what we need to improve on. Here's what we need to congratulate ourselves on and see what we can do differently. So let's hit this 4th quarter out of the park. Okay, Kelsey, what else do we have in the chat?
Awesome. Well, Amy was just clarifying, is it $600 for the year or that requires a 1099K or $600 per month? And I said for the year, and
Correct. That is correct.
Pretty sure I was right. I'm not always sure about answering the questions when it comes to these finance webinars, but I at least knew that one. And I did include the QuickBook webinar link in the chat. So if anybody else is looking for that, it's I think the title is which QuickBooks do I buy? And it goes into the desktop versus the cloud. And then it's hosted by our business advisor, Tina Oddleifson, who's our QuickBooks guru, so to speak. And she is, when there's somebody who just loves something that you can't understand at all, and you're really confused when they start giggling, talking about this thing that makes you cry. She's like that with QuickBooks. So if you have questions, she's a really good, great person to talk to, and we can definitely connect you. So I think it has it's a personal choice really when it comes down to it of your pros and cons. So it's tricky. Lots of people are saying, thank you. This was so helpful. I agree. Lots of thanks. Amy says, it's my understanding that we should be setting aside a certain percentage of our income for tax purposes and also sales tax. Should the percentage of our income go in one account and sales tax in another? Also, how often should we set aside these two things? Every month, every quarter?
Great questions. Great questions. Typically, what I would advise is you have what I would call an operating account where most of your income comes in and your expenses go out. But then I say typically have a savings account as well. And for that savings account, you have a couple of things, right? If you need to have money set aside, restricted, let's call it restricted money for income tax or sales tax, it's good to get it out of that operating account so that you're not constantly having to do this mental math that says, oh yeah, I've got a tax payment I got to make, or I've got a sales tax payment I've got to make. So I think it's a good idea to just transfer it over to that account. It's out of sight, it's out of mind, and you don't worry where the money is. I'll address sales tax first. How much sales tax is dependent on how you file with the state, and they will tell you, do I have to file, monthly, quarterly, biannually, or annually? So that's your first question that you need to know, because that tells you how often you have to file. Sales tax is simple because you're paying what you collected, right? So it comes in and then you set it aside and it goes into that account for your report and to pay it back out. So that's an easy in and out. Income tax, the other tax we're talking about, it's a little bit harder because it's really based upon a whole bunch of factors. I'll tell you what I've done since the day I started my business, because I need to sleep at night, and I couldn't sleep if I didn't know where my income tax money was coming from, right, to pay my income tax. So I get paid throughout the week, and then weekly I do a deposit. I take a percentage of that deposit and I put it over in that savings account. It's out of sight, it's out of mind. I never have to think about it again. I never worry where my income tax is coming from. Now, how much really depends on where you're at in your business and what your income looks like, right? Because as you do better, that number is going to increase. So there's a lot of tables out there that can help you with that. But even starting at a 15% is a really good number to help get you started there, so that at least you're putting away something and not scrambling, between the months of January and March. It also depends on your full tax picture, which could be you have a spouse or a partner and they have a W-2 job and they have taxes taken out. So the whole thing kind of works together where you're going to land. But my recommendation is always set aside something, put it there, forget about it. As far as estimated quarterly payments, the IRS law says you must pay quarterly estimated payments if your tax liability is $1,000 or more. So that's not what you make, that's what you owe the IRS. Once you hit that mark of I owe them, last year I owed them $1,000, then this year they expected to see quarterly payments from you. If you don't hit the 1,000, you don't have to worry about it. Okay, a new business, typically if you started a business this year, I would say to you, how much are you going to owe them? Well, the answer is I have no idea. So you don't have to do quarterly estimated because you have no idea how much you're going to owe them. But once you've gotten a year or so behind you and you've gotten an even, sense of where we're going, then you may be required to pay quarterly estimated sales tax.
And what do you say that 15% that you're setting aside? Would you recommend setting that aside every month, or?
I literally do it when I get paid, but I think it's just a consistent methodology, right? Find something that works for you. If you get paid monthly, maybe you do it monthly. What's a consistent thing that you're not going to forget about? It's just easier for me because I do deposits weekly, so I do it weekly, but something that fits your business.
Awesome. Kim, I am confused about your comment. Contact again? Are you asking for our contact? Someone else's? Just throw that in there and I'll come back to you. Kitties or Yeah. Okay. So all of our contact information, including Kitty's, will be in my follow-up email. So it'll be really easy to access everyone and everything that we've talked about today. Andy says, I think just learning how to categorize correctly is such a big piece, and I have heard that in the past. So working on this with you has provided me with such a great stepping off point with our small business. Thank you for all your time, Kitty. And so if you guys are all encountering Kitty for the first time, I have bad news. This is her last program with the SBDC. So we've been really lucky to have her working as an accountant specialist with us for the last 2 years, and our advisors have learned from her, our clients have learned from her, I have learned from her. So definitely stay in touch with her. She's an incredible asset to have for your small business. And we are lucky to have several webinars already recorded of her. So I was thanking her for letting us do that also.
Well, what I would say in response to Andy, and Andy and I are working on some things, is how can you be expected to know what you don't know, right? But when you become a business owner, there is this expectation. I'm not just good at making whatever, or being a plumber, or selling retail. I'm now expected to be a full-fledged business owner, which means accounting and bookkeeping, and understanding my taxes, and understanding sales taxes, and a retail certificate, and employee, and hiring, and payroll records, and, right? But it's sort of like, throw them in there and let's see who comes out. So fill in your team, right? Fill in your team. Andy's invited me to be a part of her team for a little while. And that's all you need to do, is just fill in the holes that you have, right? Number one. Number two, it's never going to be perfect, right? I've been doing this for 5 years. Do you think that I would have the best set of books ever? Yeah, no. Do you know who's the last one to do a reconciliations, to get to her own reconciliations? It's me. Right? It's like the carpenter's house is never finished thing. Do the best you can, try to stay up on it. Do what you can, fill in the holes that you have. It may never be perfect, but it's going to get easier. With repetition and time, it'll get easier and easier and easier.
Yes, and the Maine SBDC is happy to help fill out that team along the way, and put you in contact with some great resources like Kitty. Lastly, Kristen made a comment. We're ending up needing both kinds of 1099s per year, which is a huge pain. I think there's a website for getting free forms sent now. Are you familiar with that? Because they hate spending money on IRS forms, which is valid.
I'm sure the IRS offers those as like PDFs. I would guess they would have to. But then again, whether they're PDF fillable or you've got to do them by hand, I'm not really sure about that. I like the software. I mean, number one, it will send it for me. Yeah, I just have found it so easy. And you may have hundreds of people, but I literally only have a handful of people. So I'm happy to spend that $2 for each of those.
Well, those are all of the questions that have come in. If anybody else has any questions, feel free to stick them in there. Like I said, oh, perfect. Kristen said the IRS has them as forms they send. It's a whole racket. The PDF is purposefully not available.
We're not surprised, are we?
No, we're not. Okay, well, that's good to know. I'll look into that a little bit. We are working on a blog about the 1099Ks and the changes to everything. So that's actually really helpful information for me to maybe look into and see if I can find a loophole to include in our blog.
There you go.
So thank you for that tip, Kristen. I don't see any other questions, so I'll just say thank you so much to everyone for joining. Like Andra said, thank you, Kitty. Excellent info as always. We've got multiple business advisors in here thanking Kitty. We had a whole meeting this morning where we just thanked Kitty and the other advisors. So you guys made a great choice, a proactive choice for your small business today. And like someone said earlier, how are you supposed to know what you don't know? We are definitely here to help fill that gap or gaps as it might be. Our Webinars are generally recorded, like I said, and those are on our YouTube channel. We also have a new digital e-learning platform, and we do have some financial courses in there. They're a little more broad introductions, but doesn't hurt to check them out just in case. Big kudos to Kitty. I agree.
Oh, thank you.
Uh,
And I
yeah.
would say is one last thing too, is thank you guys for your time. I know Tuesday afternoons, we're trying to dig into work and then to take this time out. So I appreciate that. I'm always happy to do a 15-minute call, right? To kind of help you work through a problem or whatever, no charge whatsoever. So if you just need to kind of talk through something, you know, do I need help? Don't I need help? Please feel free to reach out. I'm more than happy to do that.
And we are all very lucky to have access to you to do that. So thank you for that offer. So like I said, we're the Maine SBDC. We want to help your small business. If we can't help, we'll find somebody who can. Or Kitty's on the side of my camera, so I don't know where she is. But thank you all so much for joining us. And hopefully we'll see you at the next one.
All right. Have a good afternoon.